welcome. Good morning. Happy Monday. Ryan Castle here, the CEO of the Cape Cod Canal Association Realtors and MLS. Thank you guys for joining us here on the first Zoomed In on Real Estate we have to update you guys on what's going on at the association, the MLS, and bring in guests from around the country, talk to you guys about what's going on. And for the first one in 2023, we're going to be doing them every other month this year. So January, March, May. If you have guest things you want to talk about, always drop them my way. I'm happy to do it. As we kind of try to do this once a month, and then maybe like an in-person, some kind of event in the intervening months and things like that as we roll out this 2023. So thank you guys for being here on this first Zoomed In on Real Estate for the year. I want to go over a few highlights before we get into our guests for today, and I'll also going to walk through the year in real estate stats a little bit too. Our upcoming virtual CE schedule is all posted on our website through April, so you can take a look at that and go ahead and sign up and plan your CE accordingly. And so what we have is 6 classes coming up through the end of March with some various courses. Well, 5 classes plus designation. I'll get into the designation, the seniors real estate specialist in a second. But yeah, 5 classes plus the designation, which you can get 6 hours with the designation. We'll talk more about that. And February 14th, interesting one, and is understanding flood zones in real estate. And obviously, we'll be talking a little bit about flood zones and flood insurance today with our guests too. So interested that for that. So and then our in-person CE, we are running in-person CE only once per quarter. So if you want to renew your license, you really need to take it every time we offer it with in-person CE. If you don't like taking online, we have them coming up March 29th. So mark your calendars for that. And if you're interested in marking your calendars for later in the year, contact Whitney. She'll probably give you a heads up when they're coming. But once again, we're only offering the in-person once a quarter. With every month more about 2 virtual, so plenty of chances to get your online CE, so take a look at that, but mark your calendars for March 29th if you wanted in-person classes, and also the basic classes for the general classes, core classes for CCRES, Cape Cod Real Estate Specialist Designation. As I mentioned earlier, February 7th through the 9th, we have the Seniors Real Estate Specialist Designation course. It's being taught by Isabel Perkins. It comes with 6 CE credits. It's 9 to 11, so 4 hours a day, 3 days. You have to attend all of that. So 12 hours total, 6 hours of CE, $199 to get your Senior Real Estate Specialist designation. So take a look at that. Call Whitney, reach out to her if you have questions around it. But help you on how you can help basically set yourself apart by saying that you are specialized in helping seniors, and not seniors in high school, but senior citizens. But just doing that. Also, we have signups out for our 2023 Leadership Academy. Really great alumni, really great sessions, always great feedback. One of the most highly coveted things to do a year. Our deadline to apply is February 13th. The application's on our website. You'll see the sessions that we have highlighted. With attending Leadership Academy, you also get included your entrance to the Cape Cod Real Estate Summit, which is Zoomed In on Real Estate Summit, live summit, which is at April 4th at Waquasit again. So we have some really great speakers, including some you've heard here on Zoomed In several times. Jessica Lotz from National Association of Realtors will be there talking about the latest research and demographic data of home buyers and sellers around the country, and a couple other really awesome speakers we've lined up already as we finish building out that agenda. If there's a topic you really want to hear there, give us reach out to us, let us know. And we'll find a really cool speaker for that topic if we can. But sessions for Leadership Academy here, always well received. Make sure you apply. If you're thinking about applying, not sure if it's right for you, give me a call, drop me an email. Let's have a conversation about it. Also, one of our committees that we try to get developed over the course of the spring, it doesn't fall in line with the rest of our committees that we appoint for the start of the year. It's the Leadership Development Committee. They vet and recruit people to apply for board director and officer positions for the association and the MLS. So really, we look for people who want to try to help bring in new leaders to the association there. So if you're interested in serving on the Leadership Development Committee, I will note that if you want to serve on the board, if you think that's a good role for you, the Leadership Development Committee is not, because you cannot be a candidate for the board if you're serving on the Leadership Development Committee. But we need committee interest for that due by February 20th, so we can get the board to point that in March, so we can get moving in late April into May for that, as that group does their work generally May through September, with 4 or 5 meetings to work through their work as Leadership Development Committee. Quick update, we've talked about this. We've had several sessions. I've talked about it on Zoomed In on real estate. I've done some sessions for brokerages on this. The proposed DEP regulations, they are proposing to add a new voluntary watershed permit that towns could get to basically approve their comprehensive wastewater management plan per watershed. The plan must be not exceed 20 years for that watershed plan. It will also change Title V regulations in towns that do not choose to get watershed permits. It would require homeowners to upgrade to an innovative alternative denitrification septic system within 5 years of these regulations passing. The public comment period has been extended and it currently ends January 30th. CCIR will be submitting our comments, as I've heard feedback from a bunch of you guys. And we've been analyzing them for well over a year, these comments. DEP's been really gracious and forthcoming with us, engaging us early in the process. Hasn't really responded to a lot of our concerns, but they have changed the regulations from the initial draft to the comment draft based on some of our feedback as well. Really, a lot of there's several towns who are having issues with this, and other groups as well. Really, a lot of the focus has been on these two issues here. I think everyone I've heard in the process, just like we do, supports moving forward with water quality solutions. It's a priority on the Cape and needs to happen not only to clean up our water quality, but unless we move forward with broad wastewater infrastructure, such as sewer infrastructure, we won't be able to solve housing affordability issues and availability concerns either. So I think those two really dovetail. However, I think there's issues around affordability in this plan that a lot of people have, because the two issues that everyone seems to be grouping issues under are time periods and financing. I think a lot of towns are concerned about the 20-year time period for the town watershed plans. A lot of them have 30 or 40-year wastewater improvement plans, and now they're going to have to be looking at doing them in 20 years. A lot of people are worried about the 5-year time period for watershed permit or upgrade, that they're tied at the same time. If you don't get the watershed permit within you have 5 years to get a watershed permit. If not, the new Title V regs kick in to require mandatory upgrade. It does not, that time period does not distinguish when the septic was installed. So there's, you might be installing a working Title V this year, and before the regs kick in, and you have no grant, or even in the next 5 years, right? Because you actually don't have to go to IA until after 5 years. So if you because only if you don't get the watershed permit. So there's no grandfather period based on when you install a working Title V. There's no going after cesspools first. There's a bunch of things along those lines that people are asking questions about, and I expect the final regs to be massaged around some of the time period concerns people are bringing up. as well as financing, right? There is no identified financing or subsidy to help homeowners upgrade. Everyone's promising it. It hasn't been out there yet. No requirement for the town to help homeowners upgrade when subsidy kind of exists for sewer. Most town plans that they're doing for sewer would have some kind of general levy, whether it's short-term rental tax or room occupancy tax in general, or the regular tax dollars being put to help subsidize the sewer plants, because we all agree that water quality and denitrification helps the entire community, not the individual homeowner. And so I think where that financing comes from, how that works, needs to play into the regulations, because if not, then you have no real promise of the financing on the inside. Someone asked about the which towns are we talking about in the periods. I mean, so the map that we have on our website, the map I showed on the previous page, shows the nitrogen sensitive areas. I've heard the most concern around these plans from Falmouth and from Yarmouth and Dennis. Seems to be the three that I've heard the most have concerns, especially over the 20-year time period, to do their wastewater management plans. Every town is talking about what their position is. I know Bourne's had some concerns as well. So, but their concerns are more holistically around the regulations, I think, rather than actually their wastewater management plans, from what I read. But if you live in a town I would hold your town officials to fire, ask them what their position is, how they match up against getting that watershed permit, because I think everyone, I mean, what I would say is you need to get the watershed permit instead of letting the new Title V regulations kick in. So you need to be asking your town officials, where would we be standing around getting that watershed permit? How quickly could we get it and create some certainty in our town? So I think those are the real keys around the DEP stuff there. So please reach out to me if you have more questions, other issues to raise, input. A new expanded member benefit I wanted to make you aware of is the Massachusetts Association of Realtors Legal Hotline had always traditionally been available only to brokers and brokers in charge. It is now expanded to all members. So agents, salespersons can call that as well now. The phone number is 1-800-370-LEGAL, which is 5342. And then you also have the legal hotline at marealtor.com. So I would take advantage of this great member benefit. 4 attorneys on staff, a brand new one added to the mix, Kate Berard, who's the director of professional standards and an associate counsel at the Massachusetts Realtors Legal Hotline. So take a call to them when you have questions as well. So great resource, great new expanded member benefits of the Massachusetts Association of Realtors. Wanted to bring you heads up that we've seen for years fake buyers at times, buyers who vanish or do other things that aren't really buyers at Kai, but we're seeing a real uptick in fake sellers right now. So sellers, usually it's land, it's always been land, say they're the owner of the property, say their name, they use their name that is the owner, which is not their name. So you can always ask to have a video meeting with the lead. Usually they come through online leads right now. So have a video meeting with the lead, ask to see the individual's identification. Although I would caution you, I'm hearing from elsewhere in the country, because this is not just here, this is all over the country right now, that some of these people are getting really sophisticated. They're using fake IDs to show that they're the owner of the property. So that's really tough. So we're, as an association, looking at some new technology and apps that may be able to verify some of that more, who leads are for you, if you want to. But search the internet and social media, see if they seem legitimate. Check property records, do the names match? Most of the times they are using names that match. Like I said, sometimes some of them are even using fake IDs. But if you receive a lead that seems too good to be true, or suspicious in some any way, stop and have a conversation with the broker prior to moving forward, right? People shouldn't be getting upset if you're asking for more information to verify who they are, when you're talking to sellers, especially of land. We have our annual report of the Cape Cod housing market out. It is available at capecodrealestatestats.com. Overview of statistics by single family and condo and town by town statistical breakdown. Obviously, we also have out the December stats, but the entire annual report is up there as well. So please download that. I'm going to use a couple of the segments from that to talk today. So I think what every market in the country is doing right now, I heard this the other day, the language around it, and it seemed really great, was it's a readjustment period right now. Every market's going through a readjustment period. It's just what in that stage of that readjustment period is it? Readjusting the number of sales, readjusting percent of list price received, how many offers you get, price, whatever you want to talk about. Where are we in that adjustment period? From the standpoint of, are we already readjusted or are you still in it? Our market was one of the first and the hottest in the country during that first year of the real estate boom during COVID. And as such, we were adjusting upward more quickly and more readily than most markets. As such, I think we started adjusting to a more normal market quicker as well. And so maybe we're already readjusted. Maybe you guys have figured this all out, or maybe you haven't. But I think, thinking about it in that terms of every market's in a readjustment period, just what stage of that readjustment are we in? Are we still in it or are we past it? I think those are the keys to be thinking about. Annual market activity. We were 15% down in new listings. Our pending sales were 24% down, and our closed sales were 21% down. Let me talk about this. So, where we stack up pre-COVID, right? When you look at it, and I've said this before, people feel there's more new listings coming on at times, but there really isn't. I mean, even during the real estate boom, we were seeing less new listings per year than we were pre-COVID. As you see, in 2018, we were over 7,000 new listings, and now we're down to 4,732 new listings last year. That's a hefty drop, and it's been dropping even pre-COVID on number of new listings. As interest rates have gone up, as lack of inventory around the country where people might want to move, lack of inventory at the Cape where people move to a different house. I don't know where we're going to get new listings from in the future, but that is really where to point out. Pending sales, you obviously saw we peaked in 2020, and 2021 was right there around what we had done in 2019. However, back now in 2022, fell off dramatically. I think, obviously, I think we knew that was going to happen, and that was a key. We will be sending all these out if people have questions. I don't know exactly what slide it was, but yeah, we will be able to get out slides to you. Just look at the questions. Additionally, closed sales as well, same story as pending sales. So you see all that. We knew we were going to fall. We were saying we were going to fall 20 to 25% in closed sales. We fell 20-25% closed sales. When you run out of inventory and then you have decreased buyer demand, and what I've talked about the whole time during the pandemic, you borrow buyers in 2020 for that big jump, that 1,000 extra sales that you normally wouldn't have. Well, you grabbed them probably out of 2022, right? So you take you take 1,000 sales out of 2020 and put it in 2022, and all those numbers, all those charts kind of look the same for closed sales. So they kind of level off. So I think that's really important as you think about that idea that we borrowed buyers. from 2020 to 2022. Median sales price growth Cape wide, 12% growth up to 638,500. The highest gain per town was in Truro of 32% gain. The towns with the least amount of gains were Chatham and Provincetown. I think you can kind of justify that of Chatham and Provincetown in that Chatham saw the most gain in 2021 as well. So I think, they were readjusting there, and Provincetown, had seen gains even prior to COVID, drastically mean sales price. So their gains are more neutered, as they were some of the higher markets. Both Chatham and Provincetown were some of the higher appreciating markets prior to 2022. Month supply of inventory Cape wide, we are at 1.5 months. And I like to point this out because to say our inventory was relatively flat from the end of 2021 to the end of 2022, but we doubled in the months of inventory. Why? Or not double, but increased by 50%. Why? Because buyer demand, right? So you have less sales, same inventory, you're going to see that. So as you have a little bit more inventory, you had slightly more inventory at the end of the year. However, you saw a lot more, with that. So with the buyer demand dropping, that's where the inventory drops. Months of inventory supply jumps up. So I just wanted to point that out. And then there was 2 towns that had more new listings last year than the year before. As we saw in the other market, in the other slide, new listings Cape wide were way down. However, Falmouth saw 3.2% more new listings, and Wellfleet saw 18.4% of new listings. And then I'll just highlight probably Falmouth. I would say if I had to give an award for housing market in a town that seemed to be the most normal or the best performing, you probably have to say Falmouth at this point. Was it last year? They had exactly as many sales in 2022 as they did in 2021. So right on par there. They didn't drop like the Cape wide we saw drop over 20%. They had more new listings, as we just saw, than they did in 2021. Their inventory ended up 20% more. And they were middle of the pack on sales growth. So, their prices weren't outrageously going up, but they also weren't the lagging either. So they were right. I think they were like 6th out of the 15 towns. So right kind of in the middle of the pack on sales price growth. So if I had to give a gold ribbon on, I think it's Falmouth's real estate market from that standpoint. And probably there's quite a bit of reasons, right? More year-round market, to be able to still commute at times to Boston and Province area. So I think it's a bigger market, so it than some of the smaller towns markets, but it really performed completely different than Barnstable did, which would have been same kind of year-round market. So and being a bigger town. So just to kind of highlight Falmouth there as a town that really stood out when you look at the year-end stats. And then I'm going to stop there and stop sharing my screen, and I'm going to bring in Charlotte Greene from the Cooperative Bank of Cape Cod. And as we get there, someone had a question I wanted to answer. How are the closed and the pending not the same? Well, we could have more pending at the end of the year than we did close, right? Than we did last year. So there could be more pending waiting to sell in 2023 that hasn't closed, but they were still pending at the end of the year. So that's how it would be different than closed sales. But Charlotte, I'll turn it over to you, and you and I can have a little bit of a conversation here about the mortgage markets and the Cooperative Bank Cape Cod and what's going on in your world.
Great. Well, thank you for having me, Ryan. It's always good to be here. I know everyone's always asking me what's going on with interest rates, and I'm happy to be having that conversation today. Less doom and gloom than we were seeing about a year ago. All right. So Whitney, if you don't mind just popping on over to the next slide. Oh, geez. Sorry, guys. I guess we have a lot of animation here. Right. So just quick plug who we are with the Cooperative Bank of Cape Cod. We are thrilled to be platinum level sponsors with the Realtors Association, making local underwriting decisions with local attorneys, appraisers, and people with their feet on the street with competitive rates, quick closing times, and we're reinvesting in the communities we all know and love here on the Cape. I can put us over these curtains. So wanted to start out today taking a look back at the federal fund rates and what those have done over the last 5 years or so, because the Federal Reserve has been really aggressive over the last year with increases to rates. And I wanted to give a little bit of context of what that means to the mortgage market. So when we talk about the Fed fund rates, we're referring to the Federal Reserve, who meets 8 times a year, and they set the federal fund rate, which are the rates at which banks lend each other money overnight. Currently, that's 4.5%. You can see, looking back, the rate was really, really flat during the pandemic, dropped it to 0 to spur borrowing, and we can see aggressive increases over the last year in order to stem inflation and shore up the economy a little bit. So while the Fed fund rates doesn't necessarily dictate mortgage rates, it does influence longer term interest rates to a degree, such as mortgages and adjustable rates, how those adjust when they come up on their adjustment periods, and equity lines of credit. We can move on to the next page, which is the projection for what it's going to do for the rest of 2023. We're potentially going to see another few increases throughout the year before those rates come back down as the economy becomes a little bit more solid. The Federal Reserve's ultimately looking for that rate to land around 3% by the time they're through with their increases, which should bring us back a little bit more in line with what we might have expected if we didn't have that little pandemic happen for the past couple of years. Yep. That just moves us over into what mortgage rates are doing. Taking a look back over the last 12 months, you can see some really aggressive increases towards the middle of that chart, and pretty much throughout the year, in line with those federal fund increases. Over the last few months, we have seen some relatively flat motion towards the tail end of that chart, which is a really nice indicator of our mortgage market normalizing a little bit more, similar to what the real estate market's doing right now. And all this is kind of coming in line with some less aggressive predictions for upcoming federal fund rate increases. Most housing experts are hopeful that interest rates are going to level off this year and land between 5 and 6%. The when of that happening is up in the air. We could say we're already seeing it right now, but with the Fed still have, they're going to be meeting in the next couple of weeks. So that could throw our rates up a little bit, or it could just keep us on this same track, which I think would be really nice.
Well, Charlotte, they don't tell you this stuff before they do this? Come on.
I know. There are predictions. Currently, they're predicting between 25 basis points and 50 basis points, so a quarter to a half a point increase, where coming into 2022, we were more or less guaranteed 75 basis point increases.
And so like over 2022, how much did the mortgage rate, market rate, go up? I mean, it did double?
Yeah, it essentially doubled in a year, which is pretty much unprecedented. Those high rates in the 7s were really a reaction to some of those initial Fed rate increases and some statements made by the Federal Reserve that they were going to be continuously driving interest rates up. So I think we saw a bit of an overcorrection in the middle of the year, where we were seeing rates really push into that 7% range. Right now, they've leveled out. They've come back down a bit. We're seeing people in the low to mid 5s for adjustable rate mortgages, and certain purchase mortgages being in the mid to high 5s, or interest rates in the low 6s. So that's a little bit more of a normal spread, and getting back in line with what a typical rate trajectory would have been had we not had the pandemic. Although, fingers crossed, we're hoping that they're going to land closer to that 5% mark than that 6% mark when all is said and done.
Okay.
So this is a chart we looked at last time. I just like to bring it back up again. If we look down at that orange line at the bottom, that's what the Fed fund rates have been doing. And the blue line up top is what the 30-year fixed rate mortgages have been doing. So you can see they're not directly mirroring each other, but they're pretty well correlated as we see those increases coming about. Next piece I wanted to talk about were the conforming loan limits. Over the past couple of years, Ryan, you and I have been talking about this dichotomy where the jumbo rates ended up being lower than the conforming rates, which is not something you see in a typical market. And we're seeing that level out a little bit more. Conforming rates went up. The conforming loan limit went up to $726,200 for Barnstable County in 2023. So that's a solid, call it $75,000 increase from 2022 due to average home prices. There's some areas that are called high balance, so they can go a little higher on their loan amounts. Plymouth County is eligible for that as well as
Plymouth, Plymouth, Dukes, Nantucket.
Yes, and the Boston area as well has some. And that
Yeah,
allows
I mean, I've been in interesting conversations with some people wanting to know if we should appeal it and get into the high balance area. And so, what I would say is, members, if you tell me you think that would really benefit our market, let me know. We can work with some people about doing that. I didn't know how much benefit people might think that would have. So I did want to throw that out there to see if people think we should be thinking about that. And how getting into that detail, whether we should be appealed to be able to get to the high balance area.
From my perspective, Ryan, the benefit of access to the high balance in Barnstable County is really dictated to what interest rates are doing. So if we're in a market where jumbo interest rates are below conforming rates, Fannie Freddie rates, then the current high balance or the current conforming loan limit for Barnstable County could be beneficial, where buyers in that higher price range have access to jumbo financing more easily, which could give them a more competitive interest rate. When we're in a market where the conforming rates are more aggressive and more beneficial to buyers than the jumbo interest rates, then having access to high balance is a little bit more beneficial.
Yeah, I mean, right now jumbos are more beneficial, right?
For the most part, they are, especially when you start playing in that conforming to high balance arena, because there is an additional rate add-on for those buyers passed on by Fannie Mae and Freddie Mac.
I think the real question becomes too, is there a lot of buyers that are missing out on the market who would qualify under the high balance, but don't fit the financial profile for a jumbo? And I don't know if we're going to see that much, those incomes at that level with those financial profiles that wouldn't qualify for jumbo, but would qualify for a $900,000 mortgage, right?
Yeah, that's, it's a bit of a sweet spot in the market too, where those buyers we're typically see are well qualified. It's going to be interesting to keep an eye on though, as the rates level out and kind of bounce between what's the benefit of a conforming versus a fixed.
Absolutely.
So if you have a couple more minutes for me, I'd love to get into the why of, and Whitney, we can stay on this same slide with the conforming versus jumbo. The why of the move from conforming rates to jumbo rates being more or less aggressive. You just let me know, Ryan, because I know you have another speaker coming up.
Yeah, no, that's fine. Go ahead. I mean, I think that people want to know why that happens, right? Because traditionally jumbo's a little higher, but right now we're seeing the opposite, right?
So traditionally jumbos are higher. Over the last few years, we've definitely seen them be lower. And what I'm seeing right now is they're leveling out. They're becoming more in line with the conforming loan limit, or the conforming interest rates. Still being slightly more aggressive, but we'll see what happens in the future. And that's largely dictated by that the Fed funds rate that I referenced earlier. So in the height of the pandemic, most banks had lots of deposits and very low interest margins on those deposits. So you see probably out there tons of specials right now for money markets and CDs. During the pandemic, those were not in existence. Banks were not paying out premiums on deposits. So they had a lot of money sitting at the bank that they could lend at a really low rate to make some money. Right now, there is a drive for those deposits, and we have to pay money to get people in the door with those those funds. So that means in order for the banks to make a little bit of money, they need to be lending out at a higher interest rate than what they're paying on their deposits. Additionally, with the increase in the federal funds rates, that means that they have a cost to borrow funds overnight when needed. So instead of having access to deposit money that really didn't need to pay out any interest and essentially free money from the government for overnight borrowings, now where banks are in a position where they're paying interest and both to the deposit holders and to the Federal Reserve to borrow funds. So that's driven up the jumbo interest rates, where the conforming is, it's backed by Fannie Mae and Freddie Mac. So those are not dictated really by what we would like to do or by individual profit margins. So
So
you're
the
seeing,
Coop really kind of kept a lot of the market going this year by, you in-house, you portfolioed a lot of loans that would normally have met Fannie and had lower interest rates. Where are you guys at now with that? Because at some point that party's over, right? And you've got to kind of go back to Fannie Mae a little bit more.
yeah, so we're working on transitioning into a balance of selling and retaining loans. At the bank, we always do like to have portfolio and conforming options. So loans that are sold and fit those saleable guidelines, as well as the portfolio and jumbo and maybe some more out of the box underwriting profiles. So we're looking to find that really nice balance between selling loans and retaining the servicing and having the ability to
So
hold
your
loans on our
pricing's kind of come back, and even for stuff that meets the conforming loan limits that your portfolio, your pricing's kind of come back under the conforming, will kind of be more competitive with conforming now.
Yes, I think from what I've seen, we're still a little bit more aggressive than a lot of the folks out there, but we're seeing a trend in the market of banks and lenders, well, mostly banks, moving into pricing that's a little bit more in line with the conforming and the Fannie Freddie rates.
Yeah, it seemed like Fannie got out ahead a little bit, and the banks were like, "Oh, we can stomach this for a couple more months," and then they're like, "Oh yeah, we got to go the same place Fannie's going."
Yeah, there's a lot of hedging, and depending on when you want to take the contracts for interest rates, banks can play with the time frame at which they're going to adjust those rates. So it's definitely a balancing act to make sure that we're still being aggressive with our lending in the community, offering competitive rates, while doing so at a premium that can help us keep the doors open.
Now I'm seeing a lot of people talk about buy downs, things like that. Are y'all doing that? And how does that kind of differ from interest only, from adjustable rate stuff, or is that really what adjustable rates are?
So buy downs, I really look at as points on a fixed rate to get your interest rate a little bit lower than market. And a point is a percentage of your loan amount. Right now, I do not think that's a smart move for a borrower because rates are projected to come down in the future. So that gives refinance opportunity in 6 months to a year versus paying for a lower interest rate now that, hey, if you wait it out, you might have an opportunity to get into that rate for a lower cost. And I think that's a really fine line for people.
Adjustable rates probably, if you subscribe to the belief that you think interest rates are going to come down, adjustable rates are probably more of what you're looking for than buy down.
100%, Ryan. I think the adjustable rates are a really great option right now for people who have a little bit of a higher tolerance for risk and are keeping an eye on the market and are subscribing to the belief, like you said, that those interest rates are going to come back down, which is really the most popular sentiment in the market right now.
Now, for adjustable rates, is it the same financial profile as a normal conforming loan limit, or do you need a higher, more stringent financial profile?
It is a little bit more of a stringent financial profile. The down payment requirements are typically a little bit higher, and there can be certain reserve requirements for assets in the bank post-closing. And with the shorter term adjustables, such as the 5% or 5-year arm, lenders qualify at 2% over that starting note rate. So let's say that rate looks like 5.25% today, we'd be underwriting to 7.25%, just to build in some cushion for the risk.
So like for the ability to repay.
Exactly, for that ability.
Or what your factor in the monthly mortgage would be. Okay. So my question is, what are you seeing in rates in those arms then? Like how much lower are they than the fixed rates?
We're seeing them ranging from about a half a point to 3/4 of a point lower. From my perspective right now, conforming rates are a really great option because they give you that refinance option in the very near future to take advantage of a reduction in the interest rate market, where we could easily see rates come down, let's call it 1/4 to a half a point in the next 6 months to a year. You could take advantage of that savings immediately with a refinance versus an adjustable rate mortgage. You're probably in that range right now. Your rate's not going to be adjusting down for 5, 7, or 10 years to really
Right,
get.
but can't you refinance with adjustable rate anytime too? Now
You could refinance an adjustable rate anytime.
they got rid of those that you couldn't, right? I mean, after the financial crisis, like those higher, riskier adjustable rates kind of went away, right?
Yeah, they definitely did. There's no limits on the timeframes for refinancing for people. And that's why I'm thinking right now, refinancing or planning to refinance is likely a better bet and more cost effective than paying the points to buy down an interest rate.
And I think a lot of people might have had people buy over the summer and in the fall, and then they see the rates drop 0.5% or something. At what point should a homeowner be thinking about refinance? Like, how much of a rate drop really matters to refi?
It's really case by case. Previously the rule of thumb was 1%. I never really found that to be true. There can be a benefit for people in that half point interest range. What I always like to look at is the difference in payment, the break even on the cost, and how long you plan to stay on that property. So if $125 a month is going to really make a significant difference in your budget, and you can recoup that cost in, less than a year, it makes sense. But if you're spreading those costs out over a really long period of time to break even, it doesn't make as much sense. So that's where having a really in-depth conversation with your mortgage originator partners will help determine that benefit for people, because obviously loan amount size will also help dictate that savings.
Awesome. Thank you, Charlotte. Anything else really you want to touch on today?
No, I think that's it for now. Thank you for all the time. And any questions you guys have, feel free to reach out to myself or any of the originators here at the bank. We are more than happy to talk mortgages with you till you're sick of it.
All right. Thank you very much. And I'm going to let you go and bring in our next speaker. And we've got this next speaker. And then later on, too, before we end today, we're also going to bring in Paul Nizwicki from the Cape Cod Chamber of Commerce for a bridge funding update to talk about that. But I want to bring in a new product we're launching today to bring in and talk to Jason Harris. Jason is the CEO and founder of CartoFront, and I'm going to share a slide real quick around CartoFront as well, and then Jason I think is going to show a little bit what it looks like as well. But CartoFront's a new kind of program within the MLS that we're launching today that basically within one click gives you a live quote for insurance, flood insurance. And Jason talked more about it, but it really kind of NFIP versus the private marketplace right there in front of you. So if you're out looking at a property with a client and they're like, well, is this in a flood zone? And you look and say, yeah, it is. And they say, well, what would flood insurance be? Rather than emailing an insurance broker or something like that, with one click in the MLS, you can go and have one. And, it's just going to be straight there integrated. And so I'm going to stop sharing and talk to Jason for a few minutes, let him talk about CartoFront, how it came to be. And you're probably in maybe a dozen or so MLSs at this point as well. Jason, so tell us, what do you say is CartoFront and where did y'all come from with this company?
Yeah, thanks, Ryan. Really excited to be launching today in your market. You're correct. We're in about a half a dozen markets. We started in Miami in about 2 years ago. We're in a couple of markets in Florida. We're up the eastern seaboard, and then strategically, we're also piloting out in Boise, Idaho. And to your point, climate change has affected kind of the valuation of properties with more risk especially around flood in many parts of the country. Our product has seen some growth because people want to check and see what their risk is and then pursue insurance policies appropriately to make sure that they're having enough security on the assets that their clients are investing in. I have the ability to show a couple of slides.
Yeah, so why don't you
also.
talk a little bit first too, kind of, unless you have these on the slides, why CartoFront, how y'all created this,
Yeah.
why, and that kind of thing, where y'all came from.
Yeah, so we're based in the Midwest out of Chicago. Many of the markets felt like there was a need to have an instant ability to understand what the flood zone was for the properties, as well as to provide quotes immediately, both FEMA and private, to compare what the market was looking for, so they could look at total cost of ownership. And so we really we designed the product with MLS in mind, and we got a lot of help working side by side with the Miami market. Obviously, Miami is one of the biggest risks in the country. So we emanated out of that. Over time, we'll be expanding into other products such as homeowners, because obviously everybody that's going to buy the property is going to need a homeowner's quote. And so we become a way to make it really easy for you to understand as a realtor what the total cost of ownership would be, looking from property A to property B, property C type of thing. We also
you want to show some of your slides, and I want to stress this is completely free for our members to use within the MLS system, and doesn't bind them to their clients having to use the quotes or anything like that. So just a ability to be able to kind of generate an automatic quote.
Exactly. So it's completely free to the realtors. We ask for some information to understand who you're working with, but we provide access, and you know right away what flood zone that you're on. Are you able to see my slides right now?
Yes, we are.
Okay, great. It's loading up. Back to your question about why we're doing what we're doing. There's a lot of hidden risk around the country as it relates to real estate. This is a US map, a lot of research done. A lot of this up until the last, decade or so, most of this was just a government program. Now there's a lot of private insurance that's available. When we dig into your market specifically, there's about 25,000 properties that are determined to have high to medium risk. And when you look at one of your major counties, right, we're looking at like 22,000 properties specifically in that county. What we've designed this product to be is to be something that your realtors, your members can use throughout the process, whether you're on the buy side or the sell side, whether you're upfront just looking and evaluating properties, or that you have contract in hand. We want to make sure this goes smooth all the way through closing. And in a typical market, and this is a slide from Miami, you just look for a raindrop within each listing, and the same thing will be on your MLS starting later today.
Actually, about 15 minutes ago.
Beautiful. Fantastic. We're excited to be launched now officially in your market. You look for the raindrop, you click on it, and we will present then quotes for you, both FEMA and private. And I'll show you how that's done in a moment. We also wrap everything around with training. We're completely, education, information for you. And we're going to have 2 training programs for you. One on February 15th on Lunch and Learn, and then following up at the end of February and February 28th, we'll be advertising through your channels to make sure people sign up for this. Any questions on this, Ryan, or from the group?
No, keep going.
Okay, great. All right, so let me get out of this and I'll do a demo now. What I'm going to show to you is the ability for us to put an address in our platform. So this is what people will see when they jump off from your landing page. This is the ability for realtors to put in their own address. One of the key things I want to talk about.
If you go from a property, you don't have to go through this. It'll automatically pull up that property.
Right. So now that we're live in your MLS, on each listing, it will say CartoFront. There'll be a raindrop. You click on that and you will land on the property. This way though, and we have the ability now for you from a jumping off point on your landing page, you will be able to put in an address. And this one I got.
Oh, so yeah, so even like if you're looking at a listing, right? If you're looking at a listing appointment, before you go to the listing appointment, you can go ahead and do this.
Right, exactly. This is for a realtor putting in for their own address, or someone says, hey, we want you to list something. You can put in an address and ask for a quote. You click on that, starts loading the system. And above the line here, you see what flood zone it is immediately. That's completely free to you. So here we know it's not a flood zone. If you want to investigate what the rate is for the insurance, you fill in this information.
And once again, if you're going through the MLS, you won't have to fill this in because it already has it all.
No, you still will,
right? Oh, you still do? Okay.
Yeah. Because we want to understand who you're working with and what the time frame is for them to look for a policy. I'll just say just browsing. And then the information is presented to you.
And because it's an X zone, and because it's an X zone now, you can't buy an FIP in an X zone anymore. And so that's what the first answer.
Actually, the FEMA's down right now. My tech team's working on it, but FEMA's down across the country right now. Quoting. Okay. But in this rate, so there's really kind of three different policies that we're seeing right now. This one is what we would call peace of mind, where you can get a rate here for, under $500 a year. And this is just something that keeps peace of mind. When you get on flood zones like AE, you're going to see these prices double, triple, quadruple. But it's mandatory that you have, if you're going to finance the property, you're going to need flood insurance because that's what's required. And then we're seeing a group now in the middle because FEMA changed their rating policy about a year ago, that someone's seeing risk and someone's not, where maybe the price is $35 a month on the private side, but maybe it's, $100 a month from the government side. Those are ones that we're saying do a double check, really go in and look at them deeply and understand what the risk is, because someone's seeing risk and someone's not. And we're seeing this time and time again. About 1 in 5 policies now have some sort of risk that one's identifying and one's not. And that's because FEMA's changed to their new risk rating 2.0, and they're getting much more surgical about how they're rating their pricing. And thus, there's some discrepancies in the market between the private side and what they're willing to underwrite and what the government's willing to underwrite.
And that's the important thing. There's no requirement that customers go to these people or anything like that. And you also have a very clear privacy policy for the information you're asking too.
Exactly. We are an insurance company, technology. We are not an insurance company. So we're actually the kind of bringing the market to you, but we're also asking for you to talk to an insurance licensed agent, whether it's our people we insure, who's local here in the market, or someone that you work with time and time again. You have to get these directional insurance quotes bound by someone who's licensed.
Yeah, absolutely. And so it's just an easy way to kind of see what in the marketplace real quickly your insurance rate would be from that listing, straight from the listing detail if your buyer's looking at that as well. So Jason, I think look at a couple questions.
Absolutely.
How accessible is it on a mobile app for your product?
Completely accessible. You can just go to quotes.cartofront.com, put in any address. I'll put that into the chat, and then you can just put in any address and it'll work really well mobily.
While it is just a draft idea, I mean, the quotes they're getting are quotes that can be bound, right?
Yeah, they just need a little bit more information, right? They're going to need to know who the insured is. They're going to need to make sure they know what the timing is of move in and so forth. But these are directional quotes and they're very conservative. So hopefully, the price will go down with more information.
And then a good question too is, you're right. It doesn't take into account the current coverage. So if the prop policy is assumable, things like that, this is for all new coverage, right?
Well, so let's talk a little bit about that, right?
Okay.
So if someone currently has a FEMA policy, this is really important. someone has FEMA insurance, because the rates have changed over the last year or so, FEMA is now trying to get to market rates over time. They're doing it every year. There's going to be a bump of about 18%. Okay. So if there's a FEMA policy currently on the property, that can be assumed by the new owner. Okay. If they're working with private insurance, which is more competitive sometimes, it starts fresh. But FEMA will do an assignable insurance rate for properties that already have FEMA.
Okay, cool. All right. What else do people kind of need to know about CartoFront and its program? Because I think a lot of people are going to ask immediately, right? Like, how are you making money in this, right? You're not charging the MLS, you're not
Right.
charging the agents, you're not charging the consumers for the quotes, right? So
Right.
people want to know how you make money, how, because everyone's always skeptical
Of course.
of everyone in this in today's world, right?
Right, of course. And Ryan, you and I have talked a lot about our model. So free completely on the front end to the realtor. You can quote as much as you want all day long. On the back end, we're working with the insurance companies. And once they have success, we have success with them. So we're really just an extension of the insurance markets. And we're kind of that fine line between property technology, and insurance technology. We're kind of a bridge between the two.
All right, great. And like, I mean, how many are y'all processing in, say, like the Miami market? I'm sure
Yeah.
you've looked at how many people are actually going through it and doing
Right.
all that.
We just eclipsed 40,000 quotes in our first 2 years. The first year we did 10,000, literally to the day, and we were basically in the Miami market the whole time. As we started expanding around the country, last year we had a phenomenal year. We went to 30,000 additional quotes. So the other thing to note too, this is really important, and this is a little bit of a peek behind the tent. We're working now with NAR member benefits, and we'll be coast to coast, hopefully by sometime by end of first quarter. So we're really excited with our momentum around the country. And as we've seen, unfortunately, it's just not the coast anymore. It's inland. Last year we saw Yellowstone, Dallas, Jackson, Mississippi. It's all over the country now. You can get 6-8 inches of rain in a couple of hours. That water's got to go somewhere. And unfortunately, it goes into flooding. And that's why, we're excited to provide our service to your markets. There's some great property in your market, and we want to make sure it's got the right coverages.
All right, great. And I'm going to show real quick because we had a question about where you find it in the MLS. So I'm going to
please do it. I'm also excited to see that too.
And show a live one about how it kind of works.
Great.
In that vein, if that works for everyone. So let me share my screen right here. So obviously I'm just on the hot sheet for today, and on this property right here in this bar, where all the other tools are, where you go to Cloud CMA, you get all the other more, my flood status, RPR, all that. CartoFront's right there. You just click on that and boom, retrieves it. And then as Jason said, you got to just say who it is, all that stuff. So do that real quick.
Let me make one other mention too, Ryan. Once you've signed in, you're good. We capture that. We have that. You don't need to sign in repeatedly after that. So we make it easy on you, and we know you. We assume we know what the timing is for your client, and you don't have to keep on doing that sign in piece.
And so then you end up directly on that page that Jason was just showing you. So, and then down the bottom, you have that share quote options where you can send them to your client as well, right there.
Exactly. Hey, Ryan, can you click on that little bug on the left where it says learn more? I want to talk to you the privacy piece again, right?
Yeah.
So, and if you scroll up here, we are super transparent about who we are in our role, right? And this is important here. This is to make sure you understand we're holding that information confidentially. What our role is the insurance technology part of it, the fact that these are directional quotes and you need to have them bound by a licensed insurance agent that you work with or ours, right? So this is all that's available there. Once you click on the back button though, if you're tired of seeing this, you can just hit understood in the corner there, lower left-hand, and then that bug goes away, right? But we keep it in front of you for the entire time to make sure you understand, that your information is going to be held in the strictest of confidence.
So a question came in so I choose to say, hey, Jason, you're my client. I put in your name, your number, your email address, and kind of share that quote with you. What's happening? Are the people you're selling the lead to then following up? Like, are
Right.
they getting my client's information by doing that?
So, again, this is part of how we work. We're very kind of responsive to the inquiry. So if you send it on to us, we'll follow up. It is a very gentle follow-up. This is not a hard sale. This is
That's if you contact local agent, but if I'm just sharing it with my client, does the insurance company get that lead?
Yeah, anytime you fill out the information, it registers on our side, and then based on what it says, right? If it's just browsing, we handle it in a very casual way. If it's like, I need insurance this week, then we're going to follow up and say, how can we help you and make sure you've got what you need.
I mean, but you can screenshot this page. You can do other things to share with your clients outside of sitting it through the system as well, if you're not interested in your client doing all that.
Of course, this is meant to be how it works for you and the realtors on your time and your energy.
So, do they and another question is, if you share it with your client, do they kind of get that same we understand kind of message so that they get the same kind of privacy policy?
Yes. Yeah, they get a link that brings them right back into our system so they can see the quotes, and then they have the ability to talk to the insurance agent as well.
Awesome. And I would tell my members, if you find a property not properly linking, if they can't find it, let us know, right? Like,
yeah,
we've got to work on some GIS stuff with them over time to maybe get all properties linked. As you know, some of these properties in the Cape hard to find with some of the data. So please let us know that if you find that out there happening.
And that's going to happen too, a lot of times with new construction, especially because of the way things are logged into the system. But yeah, let us know. Jason at CartoFront.com is always a good way, and I'll pass it on to my tech team.
Yeah, or our MLS staff, MLS support at CCR.com, and we can pass it on as well and get working on it as well. So Jason, thank you so much for taking the time today for us. And you're a partner at the National Association of Realtor level, as you have been through their Reach Accelerator program and some other things. So it's interesting. It's nice to see you're in about a dozen markets now and kind of growing. And obviously, a lot of your interests are like places like Cape Cod, where we have a lot of flood insurance concerns.
Absolutely. Thank you, Ryan. Really appreciate it. Look forward to the partnership with you and your team.
Thanks. And wanted to kind of touch back base and see, we're waiting on Paul Wiki to be able to get on, talk about bridge funding update. I wanted to see if anyone else has any questions around around the DEP regulations as we're finalizing them, or if you had anything you wanted to say back. Happy to have you kind of discuss that now and get to that. I was hoping it would be a little longer to when Paul could get on. I just wanted to be able to do that for you guys if anyone has any questions as well on that. And thank you again, Jason, for that presentation and talking to us about what's going on today. As I went back through our presentation before as well, we are make sure you're paying attention to what we're doing. We've got a lot of great programming coming up as well. So always interested in that feedback. So thank you guys for everything there. And waiting to see if we've got any questions coming in real quick. I don't want to keep everyone online as we need to, but I think everyone kind of wants to hear what's going on latest with the bridge. And thank you, Jason, for February 15th and 28th Lunch and Learns. Our staff, if they're not already on there, will be getting them on our calendar, so you can find them on our website. With Lunch and Learn, I assume it's a virtual presentation, though, even though it's a kind of lunch. You're not providing lunch virtually.
We're not, unfortunately, but we'll have some fun. We'll have some fun and games on it
yet, right?
What's that?
Can't figure out how to 3D print that sandwich yet.
Yeah, no, yeah, we're gonna try to get it through the dots, the O's and the ones of the bytes and the bits. Yeah, we're working on it.
All right. And so thank you guys for being here. There's a question. Yeah, I have a question about our spring conference that we talked about, and hopefully, it's April 4th at the Oquasit. We've got a couple great speakers. We've got Jessica Lotz lined up, who's the NAR research vice president of research at the National Association of Realtors, talking about the latest trends she's seeing in home buying and home selling, and profiles of home buyers and home sellers at this point, and what consumers are looking for. We got Paula Montfort, who's one of a great speaker, really about mindset in this market, how you shift your mindset in this market, but also how you are also handling the how you're handling the fair housing issues. She's one of the premier trainers in fair housing around the country. She'll be there as well, talking about different things with that. If many of y'all know, we talked about Long Island, and there's series that kind of sparked the conversation around fair housing around the country. Paula, who was brought in to be the trainer in Long Island in aftermath of that. And I'm sure Paul's going to talk about this today, but Mass DOT has more bridge public hearings coming up as well. So to kind of identify it, and hopefully he'll get on in just a second. We'll be able to talk about, I think you saw the headlines around the bridge funding being denied and what that means and what's our path forward. And so Paul's going to be able to explain that a little bit, as he's been pushing really hard for our new bridges to come online and to get funded and get designed. So we're just waiting for him to be able to get here to talk to you guys. So I appreciate everyone staying around right now for that conversation with him as we do that. But I encourage you guys all to provide your own comments on behalf of ours on the Mass DEP Title V and watershed permits by January 30th. Go to our website. We have an entire post around the Title V regulations. Hopefully Marissa or Whitney can share that in the chat as well. And so please provide them. If you're interested in me talking more to your brokerage about it, just reach out to me. We can set something up. I've done a couple of those already as well. So we're here for you on these things. And so we really appreciate it. We're really getting started on these town huddles from the Housing Protect Cape Cod outbreak of trying to look at organizing around towns. So we're going to organize around 6 to 8 towns and town huddles and really get active in some towns this year on the housing issue. If you want to be involved in that, reach out to us as well. Looking forward to all of that as well. And there is a couple more public hearings this week on the Title V regulations that you can weigh in with oral comments versus even written comments as well. So hopefully we're just waiting for a second. Hopefully Paul jumps on any minute now on this. But I really appreciate you guys taking the time on that. Whitney, I know we've got senior real estate specialist designation coming up. Can you say a little bit more about what they're going to learn, Whitney, if you will come on camera in the senior real estate specialist designation?
I can, but Paul is also officially here now, if you'd rather segue there.
All right, cool. Paul, I will bring Paul on as well. Paul Nizwicki, thanks for joining us. You're the CEO of the Cape Cod Chamber. You're really entrenched in this bridge stuff, and I wanted to talk to you because I've been getting a lot of questions around the kind of the denial of the bridge funding and what that means. Where are we at with replacement of the bridges, and what's the path forward here?
Well, Mass DOT is in the process. I mean, it goes back quite a bit, but where we are now is we're looking at the federal funding possibilities. So as part of the Bipartisan Infrastructure Act, they created 3 different buckets that the federal funding could come from for the bridge. There's an infra program, a mega program, and then a BIP, a bridge improvement program. Each of those 3 buckets will be allocating money in each of the next 5 years. So what we need for the project to move forward is to have a significant this project funded by one of those funding streams. So the first round of infra money came out in the fall, and we weren't part of that. There were a bunch of planning grants that were announced there too. In December, the bridge improvement program came out, and we weren't listed there either. But there was a $1.6 million planning grant that was associated with the 4 major projects that were funded. So then those 4 major projects were like the Golden Gate Bridge in San Francisco, major bridge connection on the south side of Chicago, a bridge that connects Ohio and Kentucky, and a bridge that comprised a major part of the I-95 corridor in Connecticut. All of those 4 projects had pre-existing federal funds associated with them and were into the environmental review process, so we're further along. So it wasn't a surprise that any of those 4 projects got funded, but it was a surprise that this one planning grant came out at the same time for a small amount, but it was the only planning grant. Most of them had been announced in the fall. So if we were reading the tea leaves, I think what the feds are telling us in this part of this process is that we like your project, but it's not far enough down the road to being shovel ready, and there hasn't been federal money attached to it. So now that the planning grant has been attached to it, we could say that there is federal money associated with the project as it moves forward. I expect the 3rd bucket for the first year, that mega program, will probably announce in the next 2 weeks. I don't think that we're going to be funded in that either. You know, I think if you look at sort of federal funding cycles, especially for a project that's where ours is at, I think year 2, but more likely year 3 is when you would see the funding come in. So that's where we are sort of looking at the federal process. We have to redo the application every year. So we'll be redoing the application, a joint application between the Army Corps of Engineers and the Mass DOT in the spring. And as we move through these Mass DOT, this community engagement piece, as we get more developed, we're more likely to put together a competitive grant and be funded. So Mass DOT has been engaged in this process for the last 12 months or so. In November, I think when they met, they showed for the first time 3 different types of bridges. You know, there was an arch design, a stayed cable design, and a concrete block design. So they took input on that. They had a survey with over 2,200 people that responded, and the arch bridge was the preference there. But that's a big step for them. They've never even come close to discussing bridge design aspects prior to that. There's another Mass DOT virtual hearing on tomorrow and Thursday at 6 p.m. And
yeah,
what
we've shared that in the chat as well, so
yeah,
people to kind of see what's going on.
Yeah, and what you'll see there is the planned reconstruction of the bridges. It's a twin bridge replacement. So they're going to build 2 bridges right next to each other to replace each of the existing bridges now, so that you'll have one bridge will carry on Cape traffic, one bridge will carry off Cape traffic.
You're talking about Sagamore right now.
Both
Both
Sagamore and Bourne.
Yeah, but there's not one bridge to replace the 2. It's one bridge to replace the 2 Sagamores.
No, there's one Sagamore bridge now.
Yeah, okay, yeah.
It'll be replaced by 2 new bridges.
Yes, okay, yes, yeah.
Yeah. So what you see,
I was making sure people weren't feeling born with that too, right?
yeah. So what you'll see on Tuesday and Thursday is that they will actually show for the first time the crossings of the bridges to one side of each of the bridges, and then splitting the bridge around each of the. So there'll be 3 options for the Sagamore, 3 options for the Bourne Bridge.
Okay.
But you're going to start to see the properties that will be impacted and the reasons why one alternative might be better than the other. So it's important. So we've got design. We're going to talk about bridge crossings now. What they're not talking about are the exchanges, the sort of on-ramps, off-ramps on those 4 landing spots yet. That's going to be controversial, will involve property taking. But but that's the last major hurdle. So the hope is that we can get into the environmental review process this spring. And so when we resubmit the application, we'll have federal money attached. We've got a state match attached, and we'll be into the environmental review process. So, I remain optimistic that we will see funding either in the next round, the year 2 round, or the year 3 round.
Even if we saw funding in next year or the year after, wherever, I mean, we're still talking 15 years before we're seeing something, 10 years.
Yeah, the application that went in for the first round, there's 3 buckets, but there's 2 applications, 1 application for the mega and the infra. But what we'll see, I'm sorry, Ryan, I got lost my own bridge fog.
No, that's all right.
Yeah.
About how long it'll take to build.
Yeah, so the application that went in had a 2026 start date and a 2032 completion date. So that's a 5 to 7 year build. Now, there hasn't been any detail about, they'll probably do Sagamore first and when that might come online before 2032. But, the thing that is striking about that date is that, that's 100 years after they started construction on the Sagamore. So, so that's sort of, that's
I mean,
where
do we have
are.
any bridges in existence that are 100 years old, really?
There is not a lot of major infrastructure around the country that of this type, that connects what otherwise would be an island that can have 1 million people on it at any given day during a peak season that is using 100-year-old infrastructure. No.
All right. And so thanks for that update on bridges. That's what I kind of been explaining to people as they ask me, is we kind of tried to go ahead and get the grant for the money before we even had a plan for how to spend the money, kind of thing.
Yeah, it's a circular chicken and egg thing, right? I mean, the state doesn't want to invest a lot of money in planning if they're not going to get the federal funding, but you're not going to get the federal funding until you have a plan that's developed enough and some state match associated with it. And if you go back 10 years, it wasn't even clear who was responsible financially for the bridges if something catastrophic happened. So it took 2 years for the Army Corps to say, oh yeah, I guess if something happened out there, it would be our responsibility to replace that. But since then, there's been an unprecedented level of cooperation between the Army Corps and Mass DOT. And another thing that we heard last week is that, there was a question on the federal level whether this would be considered an Army Corps project or a federal highway project. And so the Federal Highway Administration stepped in and said it will be a federal highway project. And so that's good as it relates to the funding. So I do think that we're in the queue, and the question is when, not if. But we'll continue to push forward to make sure that we have the most competitive application in that's possible.
Awesome. And I know another big thing you're working on, and I didn't prep you on this, but staffing for the summer as we get closer to the summer. How's that looking right now? And what should we kind of expect on the Cape in the workforce this summer?
Yeah, I mean, we're if you look at sort of accommodations, reservations, it looks like we're on pace for another really good summer. The last 2 have been record breaking, so we're still in the same category there. But the biggest issue is labor supply, and the labor supply issue is really been impacted by the housing situation on the Cape. So what we've done at the chamber here is we're in the process of, I think we'll finalize our contract this week with someone who's going to come on and be a sort of seasonal housing coordinator. So if we take the J1 student visa program, for example, in 2018, we had 5,000 J1 visa holders for the summer work travel program out of 100,000 that's available nationally. So that will show you how heavily reliant we are as a region on that program.
But we took 5% of the entire allotment in the whole country.
Yep. So all of California has 30%. Little old Cape Cod has 5%. But for the first time, it's a cultural exchange program run through the State Department. And for the first time, the sponsoring agencies were requiring employers to provide housing to that program. So we have only seen it rebound from 5,000 to about 2,200 a year. So that leaves potentially a 3,000 person hole in our seasonal workforce. So this housing coordinator will go in and work with what has been an informal housing arrangement for J1 students. Really 2 Facebook pages and some volunteers that worked through faith-based organizations to make sure that these students could find housing. So we're going to map out the existing resources, and we're going to formalize and help hopefully amplify that host network, which is sort of maximizing the infrastructure that we have. People can receive stipends for hosting students in their homes. And so we're hopeful that we can see a rebound as soon as this summer. And in fact,
so if our members have clients that are interested in hosting or have properties they'd be fine with seasonal workers, reach out to the chamber in the next week or two, a couple weeks.
Yeah, that would be great. Anyone who's interested in hosting or has a property, reach out.
All right, cool. All right, good. So yeah, I mean, that's really, I think really the long range issue is how do we fix the bridges, and the short term issues, how do we have people working here?
You got
it. Thanks, Paul, so much for that.
Right.
You're doing great at the Cape Cod Chamber, and we really appreciate the partnership with you guys.
My pleasure.
Thanks,
Take
guys.
care.
And thanks everyone for today. And Paul, we can find more information on the bridges and links we've shared. If there's any other questions people wanted to find information on, please reach out as well. But thank you guys for staying on so late. We've had a ton of y'all stay all the way to the end. I really appreciate it, and see you in March for this, but tons of programming over the next 2 months as well until we get to the next Zoomed In on Real Estate. Thank you guys.